You are listening to Uranium Spotlight on Tuesday, February 11th, 2025. Brought to you by Purepoint Uranium Group, your exploration partner in the most prolific areas of Canada's Athabasca Basin. With a collaborative investment model on district-scale projects and validation from industry leaders Cameco, Orano, and ISO Energy, Purepoint is investing in Canada's uranium future. And now your host, Chris Frostad.
This week on Uranium Spotlight, a fuel deal with South Korea raises questions. India's private sector raises itself to participate in a nuclear expansion, and BHP's Olympic Dam causes price fears. The spot uranium market closed last week at $69.70 a pound, down from $70.50 the week before. It was a week of declining prices, with market activity starting off slow and trending downward through the Friday. Early in the week, financial market volatility, partially triggered by the announcement of new U.S. tariffs, contributed to a dip in uranium pricing. While Cameco and Orano deliveries softened slightly, pricing for COVERDYNE delivery initially spiked, pushing the location differential to its widest point since August 2020 at $2.50 a pound. By midweek, as news broke that U.S. tariffs on Mexico and Canada would be delayed, sentiment improved slightly, but uranium demand remained weak. Prices for Cameco and Orano deliveries settled at $69.50, while COVERDYNE continued to slip, falling to $70.75 per pound by Thursday. The downward pressure persisted on Friday, with COVERDYNE delivery offers dropping another 75 cents, bringing the weekly close to $69.70. Despite the quiet start of the day, 3 spot transactions were confirmed late Friday, reducing the location differential to just 50 cents. In total, 6 spot transactions were recorded last week, moving just under 700,000 pounds of U3O8. Meanwhile, the term uranium market was stagnant, with no new utility requests or contract awards. However, off-market discussions continue, and several utilities are expected to enter the term market in the coming months. Looking ahead, a non-U.S. utility has offers due tomorrow for nearly 500,000 pounds of U3O8 with an August delivery date. Whether this sparks renewed buying interest remains to be seen. Korea Hydro and Nuclear Power, or KHNP, has signed a 10-year contract with Centrus Energy for supply of low-enriched uranium, or LEU, to fuel its reactors. The move is reportedly aimed at reducing South Korea's reliance on Russian nuclear fuel. In 2023, South Korea imported just over 4 million pounds of LEU, with more than 1 million pounds coming from Russia. Centrus, a U.S.-based company, has historically been a reseller of Russian uranium in the U.S. and abroad. However, Russia recently revoked the export license of its state-owned fuel supplier, TSXV, likely in response to earlier U.S. sanctions on Russian uranium imports. While both countries have left room for waivers, Centrus has secured one on the U.S. side, but it remains uncertain whether it can obtain one from Russia, or how long that process could take. This raises a key question. Where will Centrus source the uranium for its 10-year supply deal with KHNP? If the contract's goal is to move away from Russian uranium, the irony is that Centrus's most immediate option, assuming a waiver is granted, may still be Russian supply. Centrus has been ramping up its efforts to produce high-assay, low-enriched uranium, or HALEU, a higher concentration of fuel designed for advanced reactors. However, KHNP's reactors require standard LEU, which Centrus does not currently produce. The company has indicated plans to establish its own LEU production, but with no active capacity today, the timeline for ramp-up remains uncertain. With 100% of the world's uranium enrichment capability currently controlled by companies outside of the U.S., the question remains, where will Centrus's LEU for South Korea actually come from? For now, the details of this supply strategy remain undisclosed. Following on last week's discussion on India's ambitious nuclear expansion, aiming to add the equivalent of 100 large-scale reactors in just 22 years, major corporations are already positioning themselves to capitalize on this historic build-out. Among the first movers is Tata Power, a subsidiary of the Tata Group, one of the world's largest companies by market capitalization. Tata Power has previously expressed interest in nuclear energy, and its CEO recently confirmed that the company is awaiting further clarity on key factors such as liability frameworks, technology selection, foreign partnerships, and fuel sourcing. Once these details are resolved, Tata Power plans to assess the feasibility of entering the reactor construction business. Another major player emerging in this space is Jindal Nuclear, a subsidiary of the Navin Jindal Group, a massive steel and energy conglomerate with industrial operations across India. Jindal Nuclear is setting its sights on 18 gigawatts of nuclear capacity over the next 2 decades, the equivalent of 18 conventional large-scale reactors. However, both Jindal and Tata are also exploring the deployment of Bharat's small reactors, or BRSs, and small modular reactors, or SMRs, with Jindal further investigating fourth-generation reactor technologies. Bharat's small reactors are India's indigenously developed pressurized water reactors, currently being adapted for deployment in settings similar to SMRs. Meanwhile, SMRs are gaining traction globally for their ability to provide reliable baseload power with a smaller footprint, making them particularly well suited for AI data centers, industrial operations, and energy-intensive manufacturing. Fourth-generation reactors, which include advanced designs such as lead-cooled, sodium-cooled, and high-temperature gas-cooled reactors, could also play a role in India's nuclear strategy, offering enhanced efficiency and alternative fuel options such as thorium. From an investment perspective, the impact on uranium demand will depend on the specific reactor mix. While SMRs typically consume less uranium than traditional large reactors, India's plan to add 100 gigawatts of nuclear capacity ensures that demand will rise significantly. Regardless of the precise breakdown, a nuclear expansion of this scale will inevitably exert upward pressure on uranium prices, presenting a long-term tailwind for the sector. BHP confirmed this week that its planned expansion of copper production at Olympic Dam will have little impact on uranium supply, easing concerns among uranium investors. Olympic Dam is one of the world's largest copper deposits, but it also hosts a significant uranium resource, with uranium produced as a byproduct of copper mining. However, the deposit has some of the lowest uranium grades in the industry, meaning uranium output is only viable because of the primary copper production. For some time, uranium market watchers have feared that BHP's plan to double copper production at the mine would lead to a surge in uranium supply, potentially putting downward pressure on prices. However, BHP has clarified that the expected increase in uranium output will be marginal, just 1% of global production, capped at 4,000 tons. This news brings relief to investors who had worried about a supply-driven price drop. Meanwhile, nuclear power generation is projected to hit record highs this year, adding further support to uranium prices. Canaccord analyst Katie LaChapelle forecasts that uranium will average $90 a pound in the coming years. With market discipline keeping supply in check, uranium is poised for its own renaissance alongside the global resurgence of nuclear energy. And that wraps up your Uranium Spotlight coverage for this week. For more news and events from the world of uranium, please tune in next week to Uranium Spotlight.
You've been listening to Uranium Spotlight, your weekly podcast dedicated to delivering the latest news and events shaping the uranium fuel market and its critical role in the global energy landscape. Brought to you by Purepoint Uranium Group. Purepoint actively operates a portfolio of advanced uranium projects in the world's richest uranium district and has established partnerships with industry leaders. While our passion for this subject is undeniable, it's essential to clarify that the information presented here is not investment advice. Instead, our goal is to offer an unbiased and comprehensive review of recent events that could impact uranium prices. Join us again next Tuesday for Uranium Spotlight.